Good morning, everyone. Steve Ankerstar here, and thank you so much for listening in. Today, we're going to talk about three things in the morning show. Is the terrible inflation number we got this morning, and that's one, and what that means for the rest of the year for as far as Fed rate hikes. Secondly, we're going to talk about the market sell-off today. That started off pretty heinous. It's not quite as bad now. So it appears that it's not completely fallen off the cliff, but still certainly not something we've seen for a while. So we'll talk about what that means in the bigger context. And then lastly, I want to show you our new Ankerstar Wealth brochure that the team's been working really hard on. And again, this is to try to communicate and articulate the value that we offer folks. And you, as current clients, it also helps you. I'm going to give you an electronic version, show you where that is on our website. Also, it'll be attached to the email that Candace is sending out with this presentation as to how you can, help forward that to folks you think would, be good clients for us, right? That could use what we do, right, to help guide them through turbulent markets and help them achieve their financial goals. So excited to walk you through that as well. But before we get started, standard disclaimer applies. This is an educational presentation. You have to do your own due diligence before acting upon anything you hear in this presentation. More disclaimer information is available at ankerstarwealth.com. Now let's go ahead and get started with what is going on in the market today and why are we selling off so ridiculously. Let's get this here and maximized. Okay, that looks good. So it's this inflation. So this is an article for CNBC Pro talking about this stubborn inflation, and the numbers we got this morning are right here. I'll make it bold for you. So increased to 3.1%. So again, we were below 3%. And now it kind of ticked up to 3.1%. And we kind of thought we were going to be on a slow glide path on down to the magic 2%. So again, what's magic about 2%? Well, the Fed says that's our goal. You could argue all day long why we want to inflate our money away at 2% a year, but that's the commonly accepted number. So you can take that as fact as what they're trying to do. And again, all those rate hikes in 2022, those went into place. Everybody expected a recession. There wasn't one. The labor market kind of won out because so many people were going back to work. But now, people were hopeful that the Federal Reserve would start cutting rates this year. And I was a minority in the camp that I don't think they're going to do that at all. And that this only adds more fuel to me being correct in the fact that if inflation starts to tick back up, then the last thing the Fed would want to do is cut rates too soon. So I think we're stuck at where we are at that 5 to 5.5% from those 10 hikes we had in 2022 through really the rest of this year. Maybe some election nonsense comes into play where we might cut rates. But I think the Fed, independent of everything, would rather cut them too late than too early, because that would be foolish to, be the adult and earn our way to, beating inflation down and then give up too early and then inflation comes back. So again, ugly number today. We have not had one of these in a while. So this is the first time you're seeing an uptick. So everybody likes a graph. Here's a graph of a, particular, CPI with services minus energy, basically from 7% at the beginning of 2023 all the way down, kind of a continual slide, which is what we wanted to expect until, all the way through 2023. And now you have this uptick, this new number right here now in 2024. So not good that January's number came in bad, if you will. So what does that mean for the market, which is what you care about for your dollars and cents? Is right out of the gate, the market really got hammered, down 500 points. Worst sell-off since March. It's a bad sell-off. But I do want you to keep this in perspective, right? And that's tough to do sometimes when every day it's for the past 13 months, it's pretty much been high five straight across the board. We're back at new highs. Everybody lives new highs. And then, this guy's face is kind of priceless, right? That's what it feels like today. This will happen in the future. Everything, it's not perfect weather in paradise every day, right? Certainly rainstorms and thunderstorms come raging through, and that's healthy, actually. But yeah, it doesn't seem so good while you're in the middle of it, and I get that. So here's our big drop today, 1.3% in the Dow, 1.6 in the S&P and 1.7 in the NASDAQ. Some places are getting hit even harder. Obviously, there's earnings plays that are out there being released that can mean, stocks are swinging, up or down, 10% or so. But what does this mean? I think you owe it to yourself anytime we have a day like this to kind of click back out of the headline bait of today, and let's just look at, everybody likes the S&P 500. So let's just look at the S&P 500 chart. It's reading, 1.47 down at this instant to 1.48. I don't know. The 1-year chart looks pretty good. So, just zoom out a little bit. Yeah. So if you were to measure your entire net worth, today set you back all the way to what, last Monday? Yeah, that's not the worst. It's not the worst sell-off I've ever seen. To go back in time a week for my entire net worth. But look at all the money you've made. That's what you should be celebrating. 1 year change 21% down here in the bottom right. If you want to get over to the NASDAQ, which, we're tech heavy in our investing, so we kind of more follow the NASDAQ. If I'll click on the correct things here. So there's our US and here's NASDAQ. So yeah, taking a hit today, but again, it'll pop up to the 1-year chart. Yeah, soak that in. Okay, doing fine. Not worried. I think, yeah, 1 day sell off, maybe tomorrow a little bit more, but I think, when you really peel back the earnings are fine. Companies are laying folks off, which you're like, oh no, gloom and doom. Well, that's good for you as an investor, right? Because people are very expensive. And if they can be replaced by technology, that's a great thing. And you're like, well, won't that lead to a recession? It will, unless those people can find other jobs, which right now everybody's been able to find other jobs. And I think that's one thing about it. If you worry about the future, don't, right? It's because the younger folks, younger generations are so much better at finding jobs. My smartphone's in the other room, but yeah, they pick up their phone and they can get a job honestly the same day. Right. Not quite like our day when, you get let go and you're off for 3 months up doing your resumes and doing a bunch of interviews. And, the speed of the internet, you can be working pretty much right away if you want to, right? So that's what's great news. That's what's keeping us out of the recession. That's my opinion. I'm not a trained economist. I would say I know more than them because I'm not trained in economics. I have an MBA, but I'm not too close to it, right? So if you back up and look, when you go to a restaurant, they're still not operating at capacity because they can't find enough servers. And technology like Toast is helping out with that. And, that's why we're invested in some of those names that you might hear me throw out there on occasion. All right. Last thing I want to leave you with today is this pamphlet. I'm super excited. I'm proud of our team. I'm proud of what we do. I will be, bold enough to say we're very good at what we do. Look at your returns over the past several years and, you're happy, right? I know that because we've been on the driving end of that. So if there's other folks in your lives that you feel that you could use our services, please bring them on board. We do have capacity. We've been getting more efficient internally in the past month. That's why I haven't been doing as many radio shows, and I should say the past quarter, and not just the past month. We've redone a lot of our technology. We're ready to onboard folks very quickly. We know they have the building coming up, the brochure. We'll talk about that. So we built that infrastructure out. So if people want help, we can help them very quickly. Unlike years ago when it was just me, and if I had a new client, that would take an entire week for me to set the new client up. So we've really honed in on making our processes more pure and more efficient. So this is our webpage. If you haven't been here, it's got cool airplane pics. That'll never go away because well, maybe after me it might go away, but I certainly, obviously, my background and I like looking at the planes. But as far as if you want, we're going to attach this to the email if you get the email. But if you just see this on the web or whatever, AnkerstarWealth.com, go right down here. It tells you kind of the beginning of the story, and then read investment brochure here. And that's what I want to talk to you about today. Now, we went up to 16 pages from 12. More story to tell. Our taglines in the upper right: maximizing life by maximizing wealth. I could talk about that for an hour, but really, when you talk about what is the purpose of money in your life, well, it should be to maximize your life. Get more out of it, whatever you want. More family time, more vacation time, more hobby time, more bigger houses, boats, airplanes, stuff, guns, whatever you want. We're trying to help you maximize your wealth So whatever life you want to live, you can live it. Right. So that's the ultimate purpose. Money's just a tool to get more out of life. And that's how we do it. We do use a risk line approach, which we talk about in here specifically, where we use numbers to help you with your risk tolerance. There's my background. I'm military, former fighter pilot. I take a lot of the things I learned in the cockpit from the U.S. government about how not only how we fly airplanes, but also how we execute warfare into the investing world. That's what gives you that efficiency and that hyper focus on making your meeting your objectives, if you will. There's some background on the firm. You may find that interesting, you may not, but we're going to go over 10 years here later this month in February. And, kind of excited. I'm proud from the day I Googled how to start an investment firm to what we've built out today with 7 of us on the team. Been very blessed that I found the right individuals to put on the team. And that they're available and willing to join me along this journey of helping you guys. So couldn't be more proud. There's a little background if you care. What's coming up? Vertically integrated tech stack. You kind of care, but may not. But we're with Black Diamond now. We've got a nice app with a nice user interface on your phone. You can check your net worth 50 times a day if you want. I'd say that's too much. But hey, you do you, right? So, and we want to give you the information in your fingertips. So if you want to check it that much, you can. Right? You know that we don't drag you in and for PowerPoint meetings once a quarter to go over, 120 page plan. We want to give you what you need in your fingertips. So when you're curious, you can check it out. So that's what we've been doing. That will go on. We're still improving upon that. The building's coming up later this year. Supposedly they're pouring concrete this week. I haven't been out to check it. It's all of a mile away, but still don't get up, don't get up that far too often. But yeah, you can see the artist depiction down there below. We do have the anchor, if you will, building inside of an office park. It's going to be right off the New Hope Road, which is now 4 lanes all the way from Cedar Park to Round Rock. It kind of empties right where our building is. Couldn't be more excited about the location. And then we're going to have a little internal classroom there where we can have 40 to 50 people in, and I can answer your questions about the election, tax changes, estate planning. I'll bring experts in, get you more information. It's a sense of community. Hopefully you're able to make it out. If you don't live in Texas, you're not going to make it out. But for those of you who are, we'll be right there and we'll record it and we'll send out the recordings to everybody that can't quite be there. But hopefully that inspires a sense of belonging. And I hope to see you all more often than I do now. Also inside of that, we'll have the in-game lounge attached to the classroom. That's more of an executive lounge, if you will. So we'll have the classroom take place. We'll learn what we can from whatever speaker we bring in, whether it's me or somebody else. Then we'll dump in the lounge. We'll hang out for a little bit and just kind of share stories, talk investing, talk about whatever you want. It is the in-game lounge for a reason, because the ultimate question is, what is your in-game and how can we get you there? Right? And we have a lot of smart people, clients included, that can help offer their advice. So really excited about that opportunity. Lastly, the expansion phase in 2025. We do hope that there's going to be a CPA in the same building as well as an estate lawyer, and kind of work towards that family office model where we're a one-stop shop. I personally have a lot of areas I need to grow in to make sure that I can quarterback something like that. So that's going to take some effort on my part to get that ready to present to you. And I have to find those right people to kind of bring in under the same hat, if you will, and make that offering. We're shooting for 2025. I'm probably the limitation there, so I'll get that to you as fast as possible. So that is an option. You will still always have the traditional wealth option available that we're offering right now. Okay, how do we invest? We have 76 million when this was published. That was Jan 1. We're over 78 million today. I guess I shouldn't say that since today shaved a little bit off the book. But hey, we're in the ballpark to where we're on track to get to that 100 million this year. You see the individual stocks are a little under half of what we offer. So again, we're not scared of individual stocks. We understand that they are the building blocks of a portfolio. They are what's in all your ETFs. And if you're still in expensive mutual funds, you're just overpaying for what you get. Right? Back to that operational efficiency, the military mindset is reduce fees when you can. So if you have an ETF that you like, crack it open. We'll pick the top holdings. And again, it's extremely efficient. We still do use ETFs mostly for thematic work, where if we want to invest in a theme, but we don't know the best of breed stock, we will. And then we do have some alternatives, less than 10%. But if you're interested in private equity, venture capital, commercial real estate, we have offerings that I'm invested in personally, as well as have clients in those. Take a little extra paperwork and some you have to qualify for, but if you're interested in learning more, then just reach out to the team. Okay. Investment selection, like I just talked about, individual companies are kind of our bread and butter. That's how I built wealth since I was the age of 16. And, you know, people are like, oh, too scary. Well, oh, come on. How did grandma and grandpa build wealth in the 60s? Individual stocks. Yeah. And the ones that did great, that's what they were using. Okay. So sure, there is more risk and you need to be paying attention. Driving a car entails more risk and you need to be paying attention, right? So, but it's an integral part of society. So that's why we believe in individual companies. We believe in watching their earnings and how the leadership of the team and the core products or services involved. And we analyze that and we bring the best to you. We don't mess with the rest. When you get into big funds, you get the rest along with the best. So let's just pick the best, right? And I already talked about everything else out there. Okay, risk alignment. If you sit down with us like you have before, whether you remember it or not, we had a risk questionnaire or a conversation about risk to kind of see where you are on the risk spectrum. And then we build you a core portfolio based off of that risk. We call it a core and satellite approach because we also believe that you need to be interested and believe in your investments. So I will use Tesla, not the best stock in the world. It was great while it was, and great until it wasn't. I'll say about that. Now it's kind of crashing back down. However, look, it's your portfolio. We're going to put you in a professional, core portfolio based off of your risk tolerance, which is all the things we've studied and we believe in. And then if you want some Tesla on top of that, we're not going to tell you no. It's your portfolio. It's like, sure, let's get some shares. We'll sprinkle them on top. We'll keep an eye on them and we'll discuss, should keep them, sell them, buy more, that sort of thing. So it's your portfolio. So we do the professional core. And then on the edges, if you want some fun stuff or stuff that you believe in, hey, no problem. We'll bring it in there. So that's the core and satellite approach that we have for you. There's our risk scale. We used to be on a 100-point risk scale. Last year, we were moving to a 10-point scale. Same, move the decimal. But our new software that we're using, we left Riskalyze and we moved to Stratify because it's superior. And we want to bring that to you, right? But it does move the decimal. So we're on a 10-point scale from all the way from conservative down at 3, all the way to aggressive up at 9.0. At the bottom, we have a new chief investment officer that's brought kind of a new vision into the investing. And I won't say necessarily new, but he expanded upon what I would call my vision, or the original vision, which was having the conservative to aggressive portfolios. And he came to me with, Steve, we need to have some specialized portfolios out there. And I said, listening. And he brought up those that you see at the bottom. We have a couple of different flavors of income generation specific portfolios. So think I'm in retirement. I need my portfolio to kick off either 4, 5, or 6%. We have those solutions for you. We have ego stocks, which are exponential growth opportunities out there that are a little riskier than I generally favor. I like the idea, but I don't have the time or the energy to research in that space. Mike does, and he's bringing those to you to the best of his ability. Again, these are higher risk, so again, don't get on that coaster if you don't want to expect some ups and downs. But long term, super excited about finding the next generation of largely tech, the next Apple, the next Microsoft, the next NVIDIA, the next ServiceNow, all the names but let's catch them early and take the ride, right? I happen to be lucky. I was in Apple since way back, so I took the ride on that one, and it makes a difference if you can get in early. So that's what those are about. Last one, small accounts. If you're, say you're doing a smaller account, $5,000 or less, maybe you open up an IRA for one of your kids who just got a job and you're like, hey, you work and I'll fund it for you. Sure. But those portfolios are just smaller. They tend to be more aggressive, but they focus on having 4 or 5 stocks instead of a normal, 15 to 20, like a fully diversified portfolio would have. So they're smaller, but they're for a reason and we can focus on them. A lot in here about the risk number, how we use it. That's the math. It's the quantitative approach. I would say, not to throw shade, but I guess when you say I don't want to throw shade, that means you are. But some other investing entities out there will take your risk tolerance and your age and give you a cookie cutter portfolio and say, come on in 3 months, I'll show you some PowerPoint. That's not how we do it. We get way more into the weeds on it, make sure this thing's perfect for you. And then we don't drag you into the office every 3 months. We let you go live your life because we're making the money for you, and you go live your life. And when you have a question, you reach out. So very different mindsets, but we hang our hat on the math. We'll outmath anybody that's out there. Again, there's our customized portfolio, the drawdown and the upside. Again, that's displayed to you on the portfolio report once we set it up. And we engage with you when we need to adjust that. So what's going on this year? Yeah, I think we're going to be fine until mid-year, and then we're going to need to make some adjustments going on into the election because I'm not going to tell you whether the market's going to go up or down because I don't know, because I don't have a crystal ball. But generally, things get more volatile, so it means the daily moves are a lot bigger. So generally, want to take risk off into a big event like that. We have Black Diamond. If you don't have a login and you want it, reach out to Candace. She will get you hooked up. Again, that puts everything we have. We don't have any secrets. Puts everything we have into you, literally the palm of your hand, so you can check out anytime you want. Okay, there's the team. Again, Mike's the newest addition there as our Chief Investment Officer. Couldn't be more proud of the team and what they enable. If you look down at the United States map there's our reach across the United States. So yes, we have face-to-face advisors in Austin, in Dallas, in Las Vegas, and now in Cincinnati that can be your face-to-face advisor, but with technology. I like to say I was doing Zoom before 5 years before COVID. Because that was how I communicated with several folks. The initial core group was retired, military that I served with, right? Who are all over the country. So again, a Texas-based firm with national presence is how we kind of depict where we are. And if we need to register in your state to service you, we will. That's on us. We'd love to take care of you. Okay, here's a little bit of why, real quick. Maximize life by maximizing wealth. We told you that. You told you our philosophy there. Putting information in your hands. So again, if we can answer your questions before you ask them, that's like, yes, that's our nirvana, right? And then investment selection with fees in mind. We like the individual stocks. We don't like extra fees. We don't like making mutual fund and companies rich or insurance companies all off of your backs, right? So we want to get it as efficient as possible, just like flying an airplane, get everything working for you out there. All right. Standard disclaimers apply. Thanks for listening in. Again, this is available on the website if you want to send it to someone and say, hey, check out, this is the firm I'm with. I love what I hear. Check them out and reach out to the team. So with that, thanks again for listening in, and we'll catch you back tomorrow. Bye.